Yep, so let me just check if you're live, and it seems like it'll take a second.
Okay, I see it.
All right, so hi guys, we're finally live, and today I'm with Werner from Ubinetics, and he's like actively working on Youves, and we're here today to talk about Youves Amendment Proposal 002, which introduces a bunch of things into the protocol that I'm really excited about, and let's just like roll off the bat about it. So Werner, go ahead, tell us about the amendment proposal.
Sure, Manan. Thanks a lot for having me, and yeah, thanks for making this possible. So, for the amendment proposal, maybe I could just give a little bit of background first. Uh, Given that we really aim for going with this ideal of the DAO, the decentralized autonomous organization,
Right.
we're currently still running a multi-sig setup, but we're soon going to move fully to this governance process that will only be driven by the votes through the governance tokens. So this is already an important step for us already in the first amendment proposal. And obviously, we want to make sure that we have a smooth transitions once we go there. And so, in order for the platform to evolve and to create improvements and to respond to the community, we need to have these occasional changes. And also think it's good to have a setup where it's normal that we have changes every now and then. So much actually like the underlying Tezos blockchain, I think it's good to not have a change once every blue moon, but like to know that
Right.
there will be changes coming and we will be able to react to changes in the environment and to what we see and the community sees what makes a lot of sense.
Right.
So for this,
So just a second,
sure.
sorry to cut you in, but like to get the clarity about the process right now,
Mhm.
people can go and vote on the proposal at like app.use.com/governance. And
Correct.
then based on the outcome of the proposal, you implement it yourself currently through the multisig, right?
Correct.
All right, awesome. And the idea is to like get this to somewhere where like there's snapshot in the Ethereum world where you have like token weighted votes and a whole process like that where you could like even inject transactions into the proposal that like get automatically injected into the protocol if it passes. Like, is that something that you're thinking about?
I bear in mind I'm not a developer, so before I say something silly now,
No, no, not from a developer point of view. Like, sorry, to like simplify that, like, uh, are you guys like thinking about a mechanism where you can like have whatever is detailed in the process in the protocol automatically implemented once the proposal passes?
I'm not sure we're going to go this far, but we'll definitely have the current, like a process similar to the current voting process, whereby there will not be a multi-sig process behind it, where it's
Okay,
just the majority vote with the governance token will be the thing that actually makes the decisions. And how
got it.
far we go beyond that remains to be seen.
Right. And just like going into the proposal, this might be a good one to get into first. Like, can you explain the use platform to somebody who's like in like very simple words, what it is in a nutshell.
Yeah, I'm just seeing this the question that came up. I guess that's pretty much that. So maybe let me start with the proposal type, the subpart A, the Uxio goal tracker. So in the Twitter poll that we did, the community voted to have as the next tracker token a token that tracks gold.
Right.
And in line with the UUSD, we use the currency symbol UXAU, and it would very much follow the example of UDeFi. So if the community votes yes, we will introduce this new token, and the collateral will be UUS dollars. The collateral ratio, like the target ratio and the emergency ratio, will be the same as for UDeFis. It will be 300% and 200% respectively. And also the interest rate response will be same as UDeFi, which is described in the docs. And we will launch this on the test net prior to launching it on the mainnet if we go live with
Right.
this.
Awesome. So basically, in the second proposal, like the second amendment, the major thing that you guys are introducing is like a tracker token that tracks the price of gold and like follows similar mechanics to UDeFi and UUSD, where you have to
Correct.
like put up a collateral, and according to the collateral that you've put up, you can mint these tokens on a ratio and then hold them. And like when you repay the tokens that you minted, you can get your collateral free and get that back, right? So it's essentially like MakerDAO, but like versatile to multiple assets.
Exactly. So
Got it.
if you understand how UUSD works or UDeFi works, it'll be very, very similar to UDeFi.
Right. All right. So we've got another question that we can probably
Maybe let
answer.
me go through the part B of the amendment proposal, just so
Sure.
I try
Let's do
to
that
give a
first.
quick overview on that as well. So currently that we have the UUSD and the UDeFi, there's two staking pools for U tokens whereby you can get the platform profits. So there's one for UUSD where you can get UUSD as profits, and there's one for UDeFi where you can get UDeFi as profit share. And obviously, the more tracker tokens we get, the more confusing this will become. So this was good as an initial step, and also so that we didn't have too much complexity. But with likely more and more tracker tokens coming, we need to simplify this a little bit. So
Right.
the idea is that we create a single staking pool where you can stake your U tokens and receive a profit share. And also, the smart contract will aim to swap UDeFi and UUSD and Uxio, assuming this comes, for U tokens on the market, so that if there is enough liquidity in the market and other conditions are fulfilled, you will only get U tokens as profit share of the platform.
Right.
Now, such an automated process obviously has some pitfalls. So if there's no liquidity in the market, you risk uh, buying the U tokens for a very elevated price, and then you kind of waste the platform profits rather than benefiting the stakers. So we said in the proposal, you cannot move the price by more than 5% with your
Uh,
transactions. Like if you
like
sell, yeah,
I didn't like fully understand this one. Like who
sure.
who cannot move the price more than 5%?
So the smart contract will aim 4 times a day to trade, say, US dollars versus U tokens.
Okay.
Um, so before you actually start trading, you will have a look at where's the price now, and then
Right.
once you start trading, you make sure you do not impact the price by more than 5%.
Right. All
Once
right.
there's a
So
5%
basically,
price impact, you stop.
okay. So like, what do you do in those situations where you have to like pay out the tokens to the stakers, but like the cost of converting to you is higher than like the price impact is higher than 5%,
Mhm.
then like how are those situations handled?
Now, bear in mind, you do not get the staking rewards immediately. I mean, you get them allocated to the use that you have staked, but they are not, I mean, you don't get them paid out to your wallet. You only get them paid out the moment you unstake and you actually
Right.
cash in.
So
So,
this is
ev-
like the X sushi model where you can like stake your U tokens and get
Mhm.
like they call it X, so you like for the namesake, I'm going to call it XU. And
Mhm.
then the ratios of the Youves in the staking pool keep increasing. And when you unstake, then you realize your gains.
Exactly. I mean, where the ratio goes really depends on the liquidity we find in the market because there will be a constant flow of tracker tokens, like as profit share. And every 6 hours, the smart contract will aim to trade these for U tokens. If it can trade them all, it will trade them all. So there's this 5% price move condition, and there's also the tracker token can be no more than 2% below its peg. So if
Okay.
it's because also we don't want to drive the price of the tracker token away from the peg. So you don't want
Right.
the US dollar that's all of a sudden at 95 or 90 just because you sell so much of it.
Hmm. Right.
Now, the smart contract will try to do these trades 4 times a day. And if it cannot trade everything, it will just keep those basically in a bucket where every 6 hours the smart contract will try again to trade these. If it eventually can trade them all because the liquidity changes, then it's all good. Otherwise, it will just remain there. And if anyone eventually unstakes their U tokens, they will get their fair share of either U tokens or tracker tokens. So whatever could not be changed for U tokens, they will get in tracker tokens.
Right. Got it. That makes a lot of sense. That's a nice model that you guys got going over there because I've been like thinking about this kind of staking processes for a while now, and like tried my hand on building a prototype of this. And I really like this model where you're like not paying out the rewards directly, but it's like realized when you unstake sort of. And that is the model that a lot of proof of stake blockchains use for like the protocol layer staking as well, where you lock your uh, native currency and like uh, delegate it, and then like that delegated balance keeps going up. When you unlock and like undelegate, that's when you realize your actual gains.
Yeah,
So
that
it's
makes
like a
sense.
similar
Yeah.
process, right?
Yeah.
All right.
So yeah, I mean the point there is really like we want to have some automated trading, but with all automated trading, you have to be really careful that this you don't create some catastrophical scenario where you basically just waste a ton of money. So therefore,
Right.
we wanted to really limit the impact that the bot can have,
Hmm.
and we'll take it from there. And if we can't trade everything, well, we'll see. I mean, if the bot can't trade everything, it will just try again. And eventually, if it wasn't possible, it will just pay out in tracker tokens.
That sounds nice. That sounds like a nice plan. I'm really happy about this one coming out. It should be healthy for like liquidity and the price of U token as well, because it's
Yeah, yeah.
like
I mean,
yeah.
we believe that the one of the consequences of the amendment uh, proposal one, where we said we will like where it was voted that more of the U token distribution will be allocated to liquidity, that will we suspected that will have an adverse price effect on the U tokens because more people will receive these U tokens who are maybe not necessarily invested in the future of the Youves platform, but who will just sell them.
Right. That makes sense. Anyway,
So
yeah, go ahead.
I hope that this first question I was asked about, I'm not sure it's simple enough for a 5-year-old, but I hope it was simple enough for whoever whoever
So
was interested
so
in this question.
what I basically I think gathered from the question, or I think I misunderstood is I think they were asking for us to explain like the use platform simply and like not the proposal itself.
Oh, but I mean the Youves platform. If I explain that to a 5-year-old, that we're going to be here for a long time.
No problem. So let me take a stab on it. Like I've got my own ways of like trying to understand the platform
Sure.
because it's complicated for me as well. So I have like a few analogies that I've drawn for myself. So basically, like I'm gonna try to break this down as simply as I can. On use, you can like put up some money whether it be like XTZ or UUSD, which will be true for XAU. uh, you can put up some money, and based on how much you've put up on a ratio, you can like borrow an asset, right? So it's like sort of over collateralized lending where you're putting up a lot of money and
Hmm.
you can like borrow a fraction of it. And now
Hmm.
a lot of platforms do this. Like MakerDAO has DAI, which is like a stable coin, softly pegged stable coin, where you can put up a collateral and
Hmm.
borrow DAI against it and use that. And when you repay that DAI with the interest and the lending fee, you can get your initial money back, right? So what Use does is it extends this concept where you can put up some money and mint and like borrow multiple different kinds of assets. And what's special about those assets is they're like usually tracking a price of like a different asset. For example, UUSD tracks the price of a US dollar,
Hmm.
and UDeFi tracks like the index price of five different DeFi tokens. Similarly, XAU will just like be a token that is tracking the price of gold. So if you
Hmm.
wanted exposure to gold and you wanted to like long gold and like don't exactly like spend money on it right now,
Hmm.
then you can like put up your collateral, like put up a bunch of money, borrow your XAU against it, and like then whenever you want to, you can like repay your XAU or something and get your initial money back. So that is how I understand Use as a platform.
Maybe just one clarification. So if you are the minter and you mint, say UUSD, UDeFi, or UXAU,
Right,
as the minter, you create these tokens, and if you sell them, you're essentially short.
right,
So just bear in mind that if you believe the price of whatever this token is representing is going up, you will have to eventually post more collateral. So
right.
if you're
So
looking to get long exposure, you need to buy the token, not mint and sell.
right. So now with multiple assets, so, yeah, I missed this one. So thanks for bringing this up. Like when you're getting UUSD for XTZ, you can essentially like long your XTZ as well because you're keeping it there. You
Hmm.
keep your XTZ as collateral, get some UUSD, and if you think XTZ is going up, use that UUSD to buy more XTZ, put that up as collateral, and you can like leverage yourself in the
Hmm.
loop where you can do this like five, six times or whatever. Like I haven't tried this personally, but like this is something you can do where you can long XTZ by like taking out a UUSD
Hmm.
loan, buying XTZ with it, putting up as collateral on top of your original collateral, and just repeating this cycle. Or if you wanted to say short the DeFi industry, then what you could do is like mint, like put up. So for UDeFi, the collateral is XTZ or UUSD,
UUSD.
right? So for UDeFi, you can put up UUSD, borrow UDeFi against it and sell it, which essentially means that you believe the price of UDeFi is going down. So when you sell it, you get into a stable token, and then when it's down, you can rebuy it and buy a larger quantity of it, repay your loan, and get your original money back plus some profit. And similar will be true for XAU. If you think the price of gold is going down, then mint XAU, sell it or hold it, and then like sell it, and then you can like buy in at a lower price and repay your loan. Or if you want a long gold or long like the DeFi industry, then basically like buy into UDeFi or buy into XAU on through a decentralized exchange basically. Does that sum it up well?
Yeah, I think that's a good summary. Let's
Cool.
go through some of the questions that were asked there. So I guess the
Awesome.
first one, uh, explain to a 5-year-old. I think we've done that. Why
Just look
should
at
I?
the screen. I have the question up.
Okay.
Yeah.
Why should I hold UXAU? I guess if you want to have exposure to gold, long exposure, you can buy the UXAU and then it will track the price moves of gold. So
Right. So if you want to like go long on gold, then it doesn't make sense to mint it, right? Then you have to like buy into it basically.
correct.
Okay. All right.
Okay,
Yeah.
next question.
With UUSD as the collateral for the proposed UXAU token, do we expect a drop in UXAU price to keep our vault safe from liquidation? as the price of UUSD is fairly stable against USD price.
Uh, yes, that's correct. So, I mean, you either believe it is stable or dropping. I mean, stable is also fine for you because in a way, like you don't really care. You benefit from the U exposure that you get. I mean, you get U tokens allocated. So, but yeah, if you're bullish on gold, then you don't want to mint it.
Right. Got it. All right, let's go to the next one. When can we expect more collateral assets such as TCBTC, ETH-TZ to improve TVL and UUSD supply?
That's a very good question. I mean, that's actually something we're looking at for a while, even though it's not necessarily in this amendment proposal, but we it should probably be in the next or amendment proposal or the one thereafter that we suggest adding these. It depends a bit how quickly we can make progress, but
Right.
that's definitely something on the list. Just no promise yet when it will actually come, but it's definitely something on the priority list.
All right. And like when you guys have thought about this, have you like thought of it like introduce more assets that use this as collateral? For example, like whatever asset you introduce and you can introduce this as a single collateral or like multi-collateral vaults where I can like put up some XTZ, some UUSD, some TZBTC and like mint an asset against like the whole value of it.
Hmm. Uh, we will probably start with a single collateral engine. I mean, because the single collateral engine we already have, and we
Right.
kind of have to make sure we use the technology we have and just try to move the whole platform forward or just in line with the community. So there's not just development being done for sake of development.
Right. That makes a lot of sense. All right. Hi, Ricardo.
Hello.
And let's get to the next one. Um, so Massimiliano, if I read that right, sorry if I butchered it though. I quite do not understand the lockup period on use. Do I start earning interest ASAP? I lock them, or does it take 6 weeks to like unlock them? So like just like a clarification around explanation around the lockup period for I think locking up the synthetic tokens in the
Mhm.
savings account sort of would be a nice thing.
You start earning interest as soon as you start putting them in. But once you take them out, you basically essentially take them out of the interest generating bucket and put them in a second bucket that just takes 6 weeks to vest.
Okay.
So for during the 6 weeks, you do not make any interest.
Right. And like, what is the reason behind having this 6 week lockup?
That's a good question. I mean, we wanted to make sure we encourage longer term behavior on the US platform so that uh, things become a little more predictable and the platform works more smoothly. I mean, for instance, uh, if everyone is just putting the US dollars into the saving, then nobody will put the US dollars into providing liquidity, which is a problem. And in order to make the provision of liquidity more attractive, we had to make the saving a little less attractive.
So basically, the 6 week lockup period is to disincentivize a lot of people from putting it into the saving thing. So like that's like good on two counts where like people will find more things to do with their UUSD who don't
Mhm.
want to hold it for a long term, and people who surely want to hold it for a long term can get a better interest as well on the savings account.
Exactly. I mean, yeah, there's really the if if everyone just mints and puts the UUSD into the savings, in a way, there's n- not much has been done. I mean, there's not an off. The world is almost the same as it was before. So
Right.
we need to make sure that the platform has a chance of actually providing use cases for the US dollars, but they also need to be economically viable versus just saving.
Right. That makes sense. That makes a lot of sense. Let's move on to the next one. When UXAU is launched on Granada testnet, do we need to use UUSD on the mainnet for collateral, or is there some alternative? So like I was thinking about this, and what I thought was like you could just like use some testnet XTZ and mint UUSD against it and use that as collateral. So
Exactly.
basically mint your UUSD on the Granada testnet by using like testnet XTZ, which you can get from a faucet. And let
Correct.
me look up the URL for the faucet and I'll drop it in the chat for everybody. So I like put up the URL of the faucet as well right in the chat so you can like keep it for future reference. I use it quite often. So I have it handy with me. Right. All right. But like are you guys also thinking about like a UUSD faucet to like make it easy to test on the testnet?
It's a good point. We haven't really thought about this yet. Maybe, I mean, if we see more and more use cases for UUSD, that's a consideration to have. But again, not being a developer, I don't want to promise something that may or may not be difficult to do. So,
No problem. But like that might be a good one to add. Like add
okay,
that to the suggestion bucket.
okay.
All right. What is the interest rate response of UXAU?
So the response will be the same as for UUSD, sorry, for UDeFi, whereby was it twice daily? The the current rate is observed, like the value versus the soft peg.
Right.
And if the value is too low, the interest rate goes up, and if it's too high, the interest rate goes down, both for the minter and also for the saver.
And I think it's twice a day because you mentioned somewhere that it's every 12 hours.
Correct. Yeah, I mean the interest rate response on the US dollar currently is still weekly, and it
Okay.
is comparatively slow as it changes. So we realized that for the UDeFi and following tracker tokens, we want to change this to something that reacts a little faster and with more impact. And we will probably harmonize this eventually, but we need to make sure that if we change the US dollars, that's involving quite a few vaults, that we kind of bucket all the necessary changes that would be desired, like all the good changes into one, so we don't do this every now and then.
Right. That makes sense. Right. Yeah, and like basically that sums up like the development life cycle of like a blockchain product where you have to be very thoughtful of the changes that you're putting in. And like with a lot of these new financial products, it's always a learning as you go around, which is why it's nice to have like in the initial stages a product where you can like tweak some of the factors to like get to the right economic balance. So it's like
Yeah,
a very thin line of balance between decentralization and like necessary level of centralization to like drive the product forward. Yeah. All right. We'll take the next one. What LP pairs do you have in mind for UXCU? Basically.
um, most likely will be UXAU against UUSD, much like the UDeFi currently. And we will probably also just take the allocation of U tokens that currently go to uh, U versus USD and UDeFi versus UUSD, and kind of use that and spread it over three liquidity pairs.
All right. That makes sense. Um, Next one. On mainnet launch of UXCU, what are the plans for giving it liquidity on the market?
I guess that's the same. Huh? That's again, yeah, liquidity against UUSD. And let's see, maybe we also reduce the liquidity to UUSD versus wrapped USDC to dis disperse a little more, but that remains to be seen.
Okay. And Nicholas, I can like you can like send in a new chat like clarifying what you meant. Cause yeah, just like send in another chat if you left this one incomplete. All right. Uh, okay, so Ricardo wants us to explain more about unifying the U staking pools.
Sure. Um, so currently we have a staking pool for UUSD where you can stake use and get a share of the profits generated through UUSD. And there's a staking pool for UDeFi where you can stake use and get a share of the profits generated through UDeFi. Now, assuming the proposal gets approved and we will launch Uxio, then there will be yet one more. And assuming we keep adding more and more of these tracker tokens, there will be quite a large amount of these staking pools, will eventually be quite confusing and unwieldy. So what we want to do is, first of all, harmonize this into a single staking pool where all the profits generated through all the different tracker tokens get collected. And then for the allocation of the profits, the smart contract will try to exchange these tracker tokens, the UUSD, the UDeFi, and the UXAU against U tokens on the market. So that if there is enough liquidity and if the tracker tokens track the peg well enough, the smart contract will exchange all of the profits for U tokens. And if not, some of the tracker tokens will remain. And
Yeah,
when somebody actually wants to unstake their U tokens from the staking pool, they will get their fair share of U tokens. And if there's anything remaining in tracker tokens, they will get that as well.
all right. So basically, I'll just like sum it up nicely. Right now, you have two staking pools. On one of them, you can stake U and like get a percentage of profit of UUSD, minting pool, and then there's another staking pool for UDeFi where you can like put up your U, stake your U, and earn a part of the profit in UDeFi. And the idea with Youves is to put like bring multiple of these synthetic tokens, and it will get like very cumbersome to have like multiple staking pools, right? So the idea is to like introduce a concept of staking pool where the rewards are not paid out directly. Like you can't claim your rewards, but when you're staking your U, you're laying claim to a certain percentage of the whole pool of rewards. And when you unstake your U, you realize all of that rewards when you like unstake your U. And in those rewards, what users trying to do is basically uh, convert all of these tracker tokens to U when every like how many hours that was
Every
exactly?
6 hours,
So like four
four
times a
times a
day
day.
convert these tracker tokens to you and let them be in the staking pool. So when you unstake, you get like for example, if I put in 100 U and a week later I'm going to unstake, I'll have somewhere like 105 or something when I unstake. So that's like arbitrary numbers. Don't
Mhm.
take that for any calculation or something. That's just for the sake of the explanation. And in case the price impact of converting those tracker tokens to U is higher than 5%, or those tracker tokens are more than 2% below their peg, they won't convert the rewards to U, and you will be paid out the tracker token directly. So this allows for like a more flexible incentive mechanism for the whole use protocol, which I really love. Because like honestly, I've been thinking about this whole a process of like single-sided staking sort of for a while. So I love that it's coming live on use now. Yeah.
Yeah, very good.
All right. So Devlin and Nicholas have put up the same questions from Twitter directly. So I'm just gonna show for one of them. I think the process to mint XAU will be similar to UDeFi, so it relies on being short on XAU to buy back cheaper XAU to later recover the oven. And we have talked about this exactly before. This is similar for UDeFi as well and similar for XAU as well, where if you're short on the tokens, mint them, sell them, buy in cheaper, repay your loan, and if you want to go long on them, just buy into them on the market. That's
Exactly.
correct, right?
Correct.
Okay. And the second part of this question is, in case of a stock slash crypto bear market, XAU is likely to go up. Is there a way to mint XAU but being long on it?
In order to do that, we would have to have a inverse tracker token, which opens up a whole new can of worms. So we may eventually do that, but not for now. So currently, you would have to buy the UXAU if you want to be long gold.
Right. So summary, if you're short, mint it. If you're long, buy it.
Yes.
All right. Let's just get to this one from Steve. What is the best practice? Mint UUSD and get a UXU or swap? Like this gets into the territory of financial advice. So like as we said, if you believe UXAU is going down, then mint it, sell it, buy in cheaper. If you think it's going up, just buy it on the market.
I mean, here, like this, I wouldn't talk about best practice. I can just outline the implications of doing the one or the other. If you mint UUSD first rather than buying it, you will need more capital because you will need 3 times as much TES, but you don't need to sell your TES. So if you long TES and you want to remain long TES, you can mint. But if you don't really care about test exposure, or you don't want test exposure, or you really want to have as many UUSD as possible, and then you need to buy it because then you will not lose this fraction. Because like for $300 worth of tests, you can buy $300 worth of UUSD, not just 100.
Right.
But yeah, I mean, best practice. Do your own research. Sorry, I can't give any advice on that.
Yeah, and like just like a little tidbit on top of that, like when you mint UUSD against XTC and then use that UUSD to mint XCU, then sure you're like more capitally inefficient,
Mhm.
but there's a little cherry on the top where you like get U rewards for minting the tokens as well.
Yes.
So that might be nice to think about
So you
because
get
as
your
long as you're
rewards
minting them,
twice.
yeah,
You
yeah,
get because
it's like
you're now
compound.
running 2 volts.
Right, exactly. Um, let's see this one. How about P2P collateralized loans against NFTs? Maybe off-brand for use, but it does seem like a contract you could write. Thoughts?
Uh, we could do loans against NFTs in theory. It wouldn't be an issue. The problem is just like, what's the value of an NFT today and what's the value going to be tomorrow? Because it's already difficult having an idea of where tests might be in a week's time. If you look at last Friday, like how markets moved, sorry, just last weekend. But if
Yeah,
you for an NFT, it's just very difficult. You then have to have some kind of manual expertise. I mean, the way I see it, it's almost like art. So if somebody comes with a Picasso painting and says, like this Picasso paintings, I give you this as collateral for a loan.
right,
Now, is this painting worth 1 million or 10 million? Or I don't know. And I think it would be very interesting once these NFT markets are a little more established, and if there is some sort of maturation of the market where you can say, okay, we do have a handle on the prices, which may or may not come ever, but then that will be the time when you could start looking at this in terms of uh, collateral for an automated platform like Youves. If you're the kind of arts expert and you can give an appraisal for these things and you also have some skin in the game if it goes wrong, then that's a different process. And
right,
then
right,
that you
right,
could do, but I mean, it would be quite different. And yeah, never say never, but I don't really see that. Given all the possible improvements that could still be done for Juves while staying very closely to what we do already.
right. So like, I just have like a very naive suggestion where for like a lot of people that are thinking about lending against NFTs and what like the common thought right now, like the most naive approach is where you could like use the floor price of the collection. So like this qualifies one-on-one NFTs and like arbitrary NFTs. But like if you could like put up, let's say, a Tezos as a collateral, then you could track the floor price of that collection. And this is where Ubinetics can come in because like you guys are good with oracles.
Hmm.
Uh, so like basically an oracle that feeds in the price, the floor price of the collection, and or you could like do floor price into the ranking of the token in the whole collection and something like that to add a
Hmm.
multiplier. And that could be like the theoretical value of that NFT in a collection.
Just for me, originally coming from the financial industry, I I would always be quite careful with these kind of approaches because the moment there's real money involved, you will eventually attract nefarious actors as well. And if somebody can just uh, sell any of these NFTs to themselves through different
Right,
wallets and bid up the prices, you will see headline numbers that are very high, but they don't mean much. So if I
right,
can just bid up, say, 100 Tezarts to the millions and borrow a lot of money against that and then just never come back.
it's like
it,
cheat code.
they may or may not be, you may or may not be able to sell these at these prices if you want to liquidate the vault.
Right,
And you don't want to be the one with the hot potato and being the last fool in the chain.
right. That makes a lot of sense. I mean, of course, it's like a very naive approach, but like, yeah, it has got a lot of loopholes. Yeah. Anyway, let's take this one. We have like a lot of questions this time around, so I love this. Like people are very active on this one. So how does the tracker token UDFI work exactly when it is better if DeFi prices drop? Is that correct?
Well, I guess it depends. Is it better if you mint the UDFI token and you sell it, then it's beneficial for you if you sell it at a high price and then buy it back at a low price. If you
Right,
the holder, not the minter, and you bought it and eventually you want to sell it, obviously you want the price to be stable or increasing. So this really depends on which side of this you're on. So I guess this was probably when I mentioned this, it was framed from the perspective of the minter. So for the minter, it's beneficial if the price goes down because he
right,
eventually will have to buy back the UDFI token.
right, right. That makes sense. So like there's essentially very little incentive to actually hold UDFI unless you think like unless you're long on it.
Yeah, it really depends. I mean, for any of these tracker tokens, you believe like you will buy them if you believe they're stable or go up, and you will go short as a minter if you believe they're stable or go down.
Got it. Uh, let's get to this one. Can you explain the mechanism behind the split of U30,000 weekly emission among the vaults XTZ to mint UUSD, UUSD to mint UDFI, and the proposed UUSD to mint UXEUs? Like, how is that 30,000 U that's going directly to the minters will be spread out?
With the UXAU, we may have an initial booster. Like I think on the UDFI, we did a booster for 2 weeks or so, where you would get a little more U token allocation. But really, it's driven by the dollar value of your target collateral. So if I want to say mint 100 US dollars, I will need to come up with 300 TES, sorry, $300 worth of TES. And if I mint now, then these 300 will be it will represent the absolute value of the share of the overall allocation. If somebody else comes with $500 worth of TES, they will get, was it 60% more? Um, or 66. It's really, we need, like, whenever this calculation is done, you need to look at what's the dollar value of the target collateral of
Right.
all
So,
these
like,
vaults.
just to like clarify, that is like who is among those vaults who is getting how much? I think Trins intended to ask like how much is going to be allocated to the vault of each type if like the total emission is
Oh.
30,000.
So the dollar value of the target collateral is agnostic to what type of vault it is.
Right.
I mean, the exception to that is that there will be a booster, most likely on the Uxio, much like we had for the UDFI, whereby for the first 2 weeks or so, the dollar value will be counted double.
Okay.
But
So it's
once
like
this,
2x multiplier.
exactly, which adds another layer of complexity. But once this is gone, then you really look at what's the dollar value of the target collateral. It can be TES, it can be UUSD for the UDFI and the UXAU. And it's at the time of your last interaction with the vault. So if you mint or burn, then this is calculated because we can't constantly go through all vaults. Like it would be too gas inefficient.
Right,
It's
right,
just
right.
your last minting, burning action. You this value is noted, and then you look at the percentage share that the vault has overall, and that's what you get of these 30,000 weekly emissions.
No, so basically the 30,000 are like they don't discriminate between which kind of vault it is.
Correct.
All right. So it's like a unified, like again, a unified reward that's like distributed according to the proportion of the vaults. It's like not segregated for different vault types.
No,
Right.
because I mean, just there's this complexity of the booster initially, but that disappears quickly, and then it really makes it quite simple. You have to see if you have $300 worth of test collateral and you mint $100 worth of US dollars, or
Yeah.
just 100 US dollars, you generate a certain amount of fees for the platform, the 1.5625% for
Right.
minting, and then there's the interest rate differential that you also generate for the platform. If you do, if you come with $300 worth of US dollars and you mint UDFI or UXAU, you will create pretty much the same amount of minting fees for the platform. So the allocation of U tokens should be the same.
Right.
So that's really the key. We want to make sure that people who actually provide platform income, that they also get U tokens.
Right. That makes sense. That makes a lot of sense because, like, I think the initial instinct of anybody who's thinking about is the thing that, like, out of 30,000, let's say 10 is for UUSD vaults, 10 is for UD5, 10 is for UXAU. But, like,
Mm.
it sounds nice. It sounds like a better mechanism to have, like, a unified reward pool for all of the vaults and don't just discriminate between them and, like, take the dollar value itself. That
I
sounds
mean,
nice.
both approaches have their advantages and disadvantages, but I think it just gets really messy if you have more and more tracker tokens, if they all have their own pool, and then you would still need to do something if the pool, like if the sizes are very different. So it's just simpler if we don't discriminate.
And for 99% of the cases, like, simplicity is the best one.
I agree.
All right. So let's see this one. Are you guys working with the Spicy Swap founder? Spicy integrates flash loans that could be used for self-liquidations.
uh, I'm not sure whether the developers have talked to Spicy Swap on these. I overheard a conversation on this, but it's it's not something that is strictly planned yet. So we had generally conversation about a lot of these new features that would make a lot of sense, but I'd say it's not yet at the stage where you can say this will come in We will suggest this to the community in 3 months or so. There's still
Right.
all of these things are still early stages.
Got it. Let's see this one. What do you want to build next? Options with spread?
The option spread is definitely something that we want to come up with fairly soon and suggest it to the community. We've been working on that quite a bit, and I think it would be a very interesting product for the US platform.
Right.
And it would also be something that uh, is quite different from these tracker tokens, because then you would have a product with actually an expiry date, and you wouldn't need to worry so much about secondary market, and you can really take exposure and basically take a position if you think the market will go up or it will go down.
Right. Yeah, I remember you explained options to me, and like I'm just really excited for when this comes out. And I'm sure like the rest of the community is as well, because this is new to the space.
Yeah, I hope we can come up with it fairly soon. The thing is just like we have to do everything step by step.
Right.
We have to crawl before we walk and walk before we run. But
Definitely.
yeah, it will come.
Awesome. All right. Let's see this one. Are there other Tezos protocols requiring oracles already using Ubinetics, like
Uh,
Colibri or Justa? Like it, like apart from Youves, are the Ubinetic oracles being used anywhere in Tezos right now?
yes, the oracles are used. I'm not too deep into the whole oracle topic, unfortunately. I know they're used, but I can't give you, before I say something stupid now, I'll just say I will have to check on this.
No problem. Ah, that's okay. Okay. Are you looking to list on further centralized exchanges?
Um, I think it would be good to be listed on more centralized exchanges. It's not something we're actively pushing for right now. I think it's also something that we will see if there's a more concerted effort from Tezos itself, whether DeFi projects should be kind of pushed to the extent that they will facilitate the listing on centralized exchanges. Because I mean, the experience we made is for a lot of the say the more reputable exchanges, we're still fairly small and they don't really care and they have quite high upfront fees. So
Right.
I think if the whole DeFi community of Tezos could be like a unionized negotiation partner with any of these exchanges, it would probably help getting a better deal.
Yeah, definitely. That might be something that like shifts the Tezos DeFi industry as well. Because like once you get started listing on exchanges and deeper liquidity, it does a lot for the market.
Yeah.
Yeah. Ricardo Pereri. Oh, okay. I'm not gonna try pronouncing the second name. Uh they're basically suggesting bridges between different chains and the swap fee go to use holders.
Yeah, I mean, bridges definitely, it's something we need to look at. I can't give
Yeah.
you a time frame, unfortunately, but yes, we will need bridges sooner or later, and it's definitely something we're working on. I mean, probably we'll start like as a halfway step using wrapped tokens, but then eventually we will need these bridges as well.
Right. Definitely. All right. So Leo asks that what exchanges are used for tracking prices of DeFi and XAU?
For UDeFi, I believe it's plenty, but I would need to double check. I haven't ever since the amendment proposal one, I haven't really looked into this. And for XAU, it will probably also be plenty. I mean, in the end, we try to go there where the liquidity is the highest, where the price is most meaningful.
Optimal. Right. But like for the tracker token itself, like that is the price for UXAU. how are the prices?
Ah,
Like which
the
exchanges for
DeFi and
DeFi and
XAU.
XA?
Okay,
Yeah,
sorry,
like the
sorry.
tracking prices,
Yeah,
target prices.
DeFi is explained on the docs. So we observe the prices, I believe, on Coinbase and maybe Kraken. I will need to check. I wrote
I'll
the
just
page, but
drop in
already.
the link uh, if I can find it. Just yeah, go ahead. I'll like drop in the link till then.
Yeah, so DeFi, we go through a few, like I think three large exchanges for each of the five tokens
Okay,
and do these calculations. And for XAU, it'll be something similar. So for XAU, if the proposal gets approved, then we will source the price and then also put everything in the documentation where we get these prices from.
right, right. That makes sense. Okay. Here's like a nice compliment for you from Mac. You're like very involved with the community, and I love that you took out the time to do this AMA because I think it's been like super useful for a lot of people looking at the amount of questions that we had roll in. So
Hmm.
yeah, thanks for doing this for the community.
Well, thanks for the comment. And yeah, thanks also to Mac for hosting me. I'm
Yeah,
always grateful for people giving me this time and space to promote our product.
it's a fun thing to do for us as well. Yeah. Philip suggests like a DAO for the whole DeFi industry. Tezos DeFi industry. That could be a nice one.
It's an interesting point, but I guess it would be complex.
Very
So
complex.
yeah, I guess I would need to think about this and how this would look like. But it's an interesting thought.
Right. Yeah. I think we have like covered most of the questions and like more than the questions. Do you have anything that you want to talk about the proposal or use? And then we can probably end this session.
Sure. Let me quickly check. Did I have anything
Take your time.
here? Okay, just two questions that we had internally as well as the one is how long are we going to remain on the test net? And it depends. I mean, probably around 2 weeks, unless we run into any kind of issues,
Right.
then it might be longer. And where are we going to do the transactions of UUSD versus Use or UDeFi and UXAU versus Use? Um, initially, we'll be probably just trading on plenty, wherever is most liquid. But we're looking at building a trade router that will always go for the most optimal path. And maybe in a later version can even split up your orders just to create like the desired outcome at the least friction trade wise.
That'll be a very nice to have thing like a DEX aggregator specifically for the use tokens.
Hmm. But yeah, I mean, it will take some time, and also I guess the initial version will probably just tell you where, like, just route you to the most efficient exchange, and then maybe in a later stage we could also start uh, aggregating different paths to your desired outcome.
Yeah. Yeah, that's totally understandable because like it's not a trivial thing to build. It like takes effort and time. So like
Yeah, I looked into this
definitely.
just from a purely conceptual point of view, and it did my head in. It's really
I've tried as well. I can relate to that. Anyway, so we have one more question. And I think we have answered this one before. Would there be a W incentive for UXA winters? So yes, there'll be like a 2x booster, I think, for about 2 weeks for UXA winters.
most likely will be the same. Yes.
Yeah. Uh, do you want to take this one? Because I have no clue.
I mean, regulation is a tricky one. And first of all, I mean, I don't really want to comment on the state of how regulation goes, but I mean, the view of Ubinetic is that eventually the DeFi space will be more regulated than it is now.
Right.
But how quickly this will come, what this entails, we don't really know. But I think we just have to make sure like we will adapt to as we need to, and of course collaborate with the regulators when
Got
they
it.
come.
Yeah, I think it's inevitable, and we just have to figure out when the time comes. All right. So, any other questions that you want to answer?
Uh,
Because I think we've covered everything, every question on here on YouTube.
yeah, I think we're done.
Awesome.
There's no.
But like, feel free to take a minute if anything else comes to mind that you want to address, because this has been pretty informative, and like a lot of things have cleared up for a lot of people, including me. So yeah, thanks for taking out the time to do this.
Thanks a lot for hosting me, and yeah, thanks for your time as well. And I hope that we could clarify a little bit what's going on. I appreciate these things are quite complex, and there's always a lot of bells and whistles. And we try to be clear in the documentation or in these amendment proposals, but we're always so deep in the topic already that it's very hard to to gauge whether it's actually understandable for people who are not this
Definitely.
deep into it.
Yeah, definitely. Anyway, it's been awesome, and let's end the broadcast now. That's it from us today. We'll probably see you guys soon. I would want to host Werner for like almost every major proposal that's out there for use, because I had a lot of fun doing this. So see you guys later. Bye bye.
See you. Thank you. Bye bye.